Just kidding, I did an exploration in stock market investment and analysis. Almost as exciting. So what I did, my goal was to make money in the stock market. And so just a little bit of background on the stock market. Stock market is the conglomeration of all the shares of corporate stock. And when I chose this, the United States stock market, so it was domestic corporations. So the way that one would make money would be to invest in a stock, and depending on market conditions and economic conditions, that price would either rise or fall. A rise in price would mean profit, a loss, or a fall in price would mean a loss. And I hope to make money, as have many people in the stock market, but also a lot of people lost money, so try to avoid that. So the way that I would approach this is basically hypothetical. I wanted to get experience and actually try to learn the skills to do it without having the immense amount of money that I actually proposed that I had. So I had 2 portfolios. The reason being is to contrast the different styles of investing. One would be a safe portfolio, which I limited to the Dow Industrial Jones 30 stocks, and the reason being is because these 30 stocks are chosen because they're giants, they're not going to fail anytime soon. And so I figured it'd be pretty safe to go with these. On the other hand, the risk portfolio, I made a lot more risky investment decisions, as you can probably tell. And I was unlimited. I chose all different stocks from aerospace to oil. So the way that I proposed to learn was initially a combination of mentor tutelage and outside resources. But what actually happened is I learned about 99% of everything from my mentor, Jerry Becker, who is from Aspen Financial Management and also a great investor himself. And without him, I really probably would have lost money because I didn't have any idea going into it. The other part of my project was to try to explain the money that I made or the losses that I felt with the economic conditions, whether it's some political change which actually had influence and other things. And this project was the first of its kind, so I really had no idea to expect. No one's ever done anything like this at this high school. Teachers didn't know what to expect, so it really was an exploration. This here is a picture after some pretty hefty calculations of me, of course. Next time. So why I chose this project was primarily I've been interested in going into finance for about a year or 2 now. Mostly, I'm looking towards investment banking, either that or chief financial officer, some corporate position like that. And I thought, what better to make me sure of it than to get real-world experience. And so, one reason. Second reason is I took an economics class this last summer, and what better follow-up to follow something that is so characteristic of the economy, the stock market. Third reason is my father was a financial planner. He did basically the same thing that I did, used the same tactics, tried to make money. Next slide. So this is my first portfolio, the Dow Portfolio. The graph on the right in the blue line is my portfolio. The red line is the Dow, the market. As you can see, at all times during my project, I was doing better than the market, which I'd like to count on my skills, but either that or it was some crazy amount of luck. But I'd like to say it's my skills.
No luck.
So on the left there is a stock that I followed. That's Procter & Gamble. And one of the strategies that I would use in choosing a stock is you can see down there at the bottom, the bluish graph. I would try to, that's a relative indicator in the stock strength compared to previous times. And so really you want to buy low, sell high. That's the general rule. So you would try to buy around a trough in that blue graph and sell around a high point in the graph. And that's almost a sure way of gaining profit. And as you see, if I would have bought there, would have made profit, and I did. Procter & Gamble was actually one of the most successful stocks that I had. Some other stocks that I had were Walmart. I think all of you know about Walmart, right? And Bank of America and Procter & Gamble, like I mentioned. Excellent. So this is the aggressive portfolio. Again, I outperformed the market. With the safe portfolio, I made about 11%. I'll talk about the actual profit later. But the aggressive portfolio, I actually made 13%. And again, outperformed the market. So the strategy with this one was really to, well, again, buy at troughs and relative indicators, but to throw a bit more risk into it, I tried to hop onto trends, which are not necessarily sure gains, but it ended up working for me. As you can see there, this is Microsoft, and for about 2 months there, it went down in price every now and then, but the general trend was upwards. And I hopped onto that about a month into it and ended up making, this was like an 11% gain on just this stock, one of the highest that I had. The aggressive portfolio actually had a lot more interesting names. For example, the Schlumberger Limited Corporation, which does oil, the Northrop Grumman Corporation, which is aerospace defense, and also the Lockheed Martin Corporation, which is a little bit of everything, aerospace defense, satellites, energy, the whole 9 yards. All right, next slide. So the market conditions, as I said, I would try to keep up with the market conditions. There were two big factors in this project. The first is that September is traditionally the downtime for the market, and as you can see, the prophecy was fulfilled this year again. That red line right there is a downward trend. This is the Dow again. And so during this period, I invested like in nothing because I didn't want to lose any money, because that's most likely what would have happened. The second big factor that weighed on my stocks were these guys over here, and that's Congress. And as Kern talked about, there was a big budget crisis, and it was looking kind of grim there for a while. Like, we weren't sure if Congress was actually going to pass a resolution. But the day, I believe it was October 16th, that they proposed that they would come to a resolution, each of my portfolios made about $1,000 each in just that one day. And that's at that green arrow right there, which is a big spike. Next slide. So I consider my project about 100% success. I wanted to make money. I wasn't even sure if I would, but then I ended up outperforming the market 5.5 times over, and then 6.5 times over on my aggressive one. The real profit, well, I guess it's hypothetical, but what I would have actually made had I $50,000, which I don't have, would be $5,515.34 on the safe portfolio, and then $6,578.04 on the aggressive. And so I made more on the aggressive, which I can explain more because I wasn't limited. I could invest in more. Wasn't just limited to the Dow, but also the market at this time didn't have any crazy crashes or anything like that. Had there been any insane crashes or fluctuations, I predict that I probably would have lost a lot more on the aggressive than the Dow, which is again the Dow companies are a lot stronger. They've been around for a long time, know how to deal with those kind of things. Down here is some of the stocks again. There's Schlumberger, my favorite. All right, next slide. So what I learned, I learned so much. So first of all, I learned how to make money, or at least I think I did. I mean, not sure if it's crazy luck yet, but yeah, I think I learned the skills because my stocks outperformed the market so many times over.